Hi, this is Joe. We're going to talk about the S&P. I'm going to actually show the chart and go into a little detail on the QQQ, the Nasdaq 100, and then I also want to talk about sentiment a little bit, bring you up to speed or up to date on a sentiment chart that I use and why it's starting to get a little bit more important right now. I'm getting to a point now where maybe people are getting a little bit more bullish. So let's take a look at the charts, and I've got the S&P with four time frames up. And we'll start with the monthly chart, and again, stay focused on the fact that I've got an 18 MA and a 40 MA on all four of these time frames. Right now on the monthly time frame, the 18 is above the 40 and both lines are rising. That constitutes a trend on the monthly chart. If you go to the weekly, you've got an 18 week below the 40 week. The 40 is basically flat. What we're looking for here is either one or two things is going to happen. We're going to start to sell off here and cause the 18 cause price to kind of roll down through and prevent the 18 week from turning upward. And that would be probably the most bearish scenario that I could come up with. And if that were the case, I think the support level is probably somewhere down underneath 2,800, maybe 2,750, something like that, if we decided to really get going to the downside. But again, I think it's something that's going to have to take place pretty quickly. If we don't do that, we're going to turn this 18-week moving average to the upside, and then we're going to have a rising 18-month line. We're going to have a rising 18-week line, and we've had on a daily chart the 18 has been rising and it's above the 40, and both lines are rising at about the same rate. So that's a pretty decent trending play. We don't have great momentum on either MACD or on the ADX at this point. So it's not a really strong trend, but you have to consider it a trend to the upside on the daily when the 18 is above the 40 and both lines are rising. If you notice what happened on the hourly, once again, the red DI, let me switch over to the hourly. So once price started to rally, the red DI just kind of ducked down below 25, and both lines have been kind of crisscrossing around this 25 level without either one really having control. And if you look at what price has done, you had the gap down and now you've had the gap up. So we're still dealing with resistance on the hourly chart up in here around 3,200. And right now it looks like there's support probably down somewhere around 3,000 as we talked about before. It might end up being a little bit higher than that and we form a little bit more of a tighter range. The question I've got is this going to turn into something more meaningful to the upside, or is it going to get real sloppy? And again, I've told you in the past, I'm not going to make a big market call. I don't think that's how you make money in the market. I think the way you do it is you frame out these key levels, and if you let the market determine or tell you what direction the market wants to go, and then you play in that direction. I want to go back to the daily chart because I want to show you what I think is taking place. It might be a little bit more important. If we go to this is all three time frames on one chart. I've got the 18-month line, which is starting to rise now in red. I've got the 18-week line, which is still declining here in blue. And then you've got the rising 18-day in magenta. So what I'm looking for, and what I mentioned a few weeks back, was that if we pulled back, I wanted it to be under control, an orderly pullback. Obviously, we did not get that. It was a really violent sell-off and decline, and it really kind of put the whole pattern in jeopardy. But because we've gotten a pretty good rally off of this support area of 3,000, the potential is that we could consolidate between 3,000 and 3,200, and while that's taking place, the 18-week line turns up. And I've said this and brought this up a few times. I want to make sure you understand why I keep harping on this, because we're looking for a time when all three time frames are working together in alignment, where I've got a weekly, a daily, a weekly, and a monthly, all sort of pointing in the same direction. that's really where you have the opportunity to make outsized gains. So we've reached this point now where the trends essentially, if we look at it from a 4 time frame standpoint, the trends are just not in alignment quite yet. And the other part of the other factor related to this weekly chart has to do with the MACD. The MACD is right at what I would consider to be a resistance point near the 0 line. It's trying to cross over, and I think if it makes a little bit more progress working through that 0 line, you have to start thinking that price is actually going to start working higher as well, maybe even break through 3,200 and work up towards this resistance zone. One other point that I think is real important, I've brought this chart up before. It's the chart of, it's Investors Intelligence. If you go to their website, this is a very good, they do a lot of good different types of indicators. I've been using this bullish versus bearish advisor sentiment number probably for about 30 years. And what it shows is it shows the price of the S&P up top, and then underneath is the difference between the bulls and the bears. Now, this is based on the letter writers for what they're thinking, whether they're bullish or bearish. So this 0 line is where if the black line is at 0, it would mean that there's an equal number of bulls and bears. And whenever there's more bears than bulls, this will drop down under the 0 level. And that's what we had here when the market really got killed. We had a lot of bearish letter writers. And it was part of the reason why I really felt like if we got a reversal at this point, undercutting the low from 2018, 2019, that we'd probably get a pretty good rally because people got very, very bearish. Same thing happened in late 2018, early 2019. And I just thought I'd point out that now the sentiment number is actually over 30. So the way they look at it is once you get over 30, it calls for caution. You got to be a little bit more cautious about it. Once you get over 40, they actually call for more defensive measures once you get over 40. And if you look back, it increases the odds. When you get over 40, you're definitely increasing your odds of some type of a retracement, sell-off, decline. And so it's a good thing to have as a secondary indicator. I use it as a secondary indicator. And what I mean by that is price and moving averages and the technicals and all that, they're, to me, the most important and primary indicators that I use. But as a backdrop, I like to know what's going on on the sentiment side, to know in the background, well, if the market starts to turn down here, if price starts to act a little more poorly, are we in a situation where it could be a lot more, it could be a much more violent decline, or there could be a lot more downside risk. And that's what I think having a backdrop of the sentiment number can be very, very useful. Let's go back, and I've got the 4 time frames, and I want you to just take a quick peek at these 4 time frames and notice what they look like. The strength of these different trends. And now we're going to take a look at the QQQ, which is the Nasdaq 100. Notice the difference in the slope and the strength of the monthly and how you didn't really undercut. Now, you had a 40% drop or something like that from the peak. It did qualify as a bear market, but you really never closed below the 18-month line. You never really lost that much slope at all. The 18-month and the 40-month are rising at about the same rate. That's a very strong trend. Notice the MACD never broke its signal line. There's a lot more strength in this index. And then if we go to the weekly, the 18 never crossed down below the 40. Now, the 18-week line is flat. It is not rising. But just the fact that this indicator, this 18, never crossed down below the 40-week moving average, I think is a big deal because we are at a new high. You have to say that the bear market is over for this index because even though you drop 40% or whatever, we are at new highs for this index. So we're starting a new phase. It's not to say that it can keep going to the upside, but if you're going to if you're going to decline, you're going to have to create a new bear market. It's not in one right now. So if we go to the daily chart, I think this is also equally telling. If you notice, look at the strength of of the moving averages and how you're not giving away much. The S&P was dropping down deep below the 18. This is not really giving way. It's really prices respecting the 18 at least at this point. MACD is starting to lose a little bit of strength, so if we move up higher here and MACD doesn't confirm, that would be kind of an early tell. But again, if we go back and look at the 4 time frames, one of the things I thought I would mention is the fact that you've got pretty good strength and pretty good momentum in place where MACD is above the signal line here, it's above the signal line here. It's lost a little bit on the shorter time frames, but the bigger time frames are still pretty solid. And I could see this sort of taking a breather and consolidating and letting this 18-week line start to move up and cup around, but at this point it's just hard to see anything too violent to the downside other than some type of consolidation or contraction. So that's the update on the bigger indexes and the way sentiment is showing. I think it's we're at somewhat of a critical time. I think if we get over 40% on that sentiment number, I think you got to probably get a little bit more on the defensive side if we see any more sign of selling. So please hit the subscribe button, and we'll talk to you soon.